Hello everyone, welcome to my channel for yet another video on Nifty Bank Nifty analysis. Today we will take a look at the daily chart for both Nifty and Bank Nifty, and we'll also take a look at the key levels where we can trade tomorrow. Tomorrow happens to be the Bank Nifty expiry and also happens to be a day before the Nifty expiry. These expiries will be monthly expiry, so it will be interesting to see how the market is placed right now and where on which side can we expect a movement, right? So we'll take a look at the charts and we'll also look at the key levels, but before that, a disclaimer: all the views and opinions expressed in this video are for learning purposes only and in no way is a buy or sell recommendation. Any buying or selling decision or any trading or investing decision needs to be taken after consultation with your respective financial advisors. Viewer discretion is advised. So what I'm sharing with you all right now is a Nifty spot chart on a daily time frame, and as you can see here, what we have is a bearish candle, a bearish complete body is a bearish candle, and it's a medium length body, and also it has a wick, but the wick is very small in comparison to the body, right? So this can be considered as a very short variation of a Morubozu candle, a bearish Morubozu candle. The interesting thing to note here is we have a lower high, lower low formation, and also I have added one more channel, the pink channel, right? The pink channel which I have added. So if you see, this pink channel has been the bottom of this pink channel has been the past three candles bottom, right? So this candle, this, and today's candle, right? And if you see here, on the very first candle, this channel for now makes sense because I'll tell you the reason why. Because uh, we have 3 points which are the lows of the last three candles, and we are getting a channel which has a bottom that aligns with these three lows, and also the very first candle, that is yesterday's candle, Friday's candle uh, was took resistance at the middle of this channel, right? As you can see here, middle of this channel. And the next Monday, that is yesterday's candle, took resistance at the top of this channel, right? And then today's candle, all of the three candles have taken support at the bottom of the channel, but today's candle has uh, kind of opened at the center, or the middle of the channel, and from there it has taken resistance and is again back towards the lower end, right? And it has taken support at the lower end of the channel, and then it is expected to move up, right? So all in all, these three things, these three candles are suggesting that this is the channel that we are looking at. uh, does this indicate that we could see further downfall? Yes, we can, but again, if this channel is to be believed, then my guess is the next, that is for tomorrow, right? Tomorrow the level would be, just a minute, 22,833. So we can go down till 22,833, and from there we can we may experience a reversal, right? Also, if the market opens with a huge gap up or something, then in that case we may again see a candle like this one, right? This candle where the open was here, it went up, touched the top of the candle, and then the top of the channel, and then from there it took resistance and again managed to close below the mid of the channel. So it will be interesting to see where the price plays to tomorrow. As I said, we can expect a further downfall till 22,833 levels, and if that is the case, I think from there we may experience a reversal. So the key levels to watch out for tomorrow would be 22,999 on the upper side, that is roughly around 23,000 on the upper side, and 22,855 on the lower side. Now, as I said, 22,855, if the price breaks and sustains below 22,855, don't rush into going with the downside trade, because as I said, the max level as per the channel that we see is 22,833. So we don't want to trade for those 20 points, right? So in that case, if the price breaks and sustains below 22,833, in that case you can consider going ahead with the downside trade, but keep a stop loss of 22,855, so that the price, if the price comes up above 22,855, then we exit from that short side trade, right? If the price sustains below 22,833, then the initial targets would be 22,777, which happens to again be the black line, which is kind of, if you see the breakout point, right? So this particular movement was broken out at this level, right? 22,777. So the level which was acting as resistance will now act as support. So even if the price goes below 22,833, it will maximum go down till 60 points, that is 22,777, and from there we expect a reversal, right? So ideally, if I were to trade on a downside, I would not do it for a mere 50 or 60 points, right? But again, if you want to do it with a strict stop loss, right? On the other hand, if the price breaks and sustains about 22,999, that is 2,300, 23,000, then in that case, we can go ahead with that upside trade, and that first targets would be definitely 23,111, which happened to be the last all-time high. From there, we may see some profit booking, and then we may see a further up move, right? Another reason why I'm looking at a movement which will be close to the current levels or higher than this is because of this rectangle, right? So if you see this close 22,888 to 22,966, so for last 4 days, just looking at the close, okay? So last 4 days the close has been within this range of 880 22,888 to 22,966, which is roughly around not more than 80 points. So for the past 4 trading sessions, the close has been within this 80 points, right? So tomorrow again, if the close happens to be within this 80 points, then in that case, this is kind of a consolidation. And also, if you see here, this is this and this would then form a flag and pole pattern, right? This and this, right? So if this forms a flag and pole pattern, and it is likely that the price will continue to go up. This line is the 4th June, which is the results day, which is very important, and according to me, I think the price is going to go higher, right? My biasness is towards bullishness. However, given the candlestick patterns, I have given you the levels where we can trade, okay, even on the downside. But again, there is a word of caution. If you are initiating a downside trade with a stop loss, right? Let's look at Bank Nifty now. So Bank Nifty is more strong. I have been telling yesterday also that Bank Nifty appears to be more strong as compared to a Nifty because of the candlestick pattern that was higher high, higher low. But now today's candlestick pattern is a lower high, lower low. But again, there are two things to this, right? Yes, today's close is below yesterday's close, which is also quite worrisome. But there is this level, right? 49,000. So 49,066 is the level, which also happens to be kind of a breakout zone, right? So it had been acting as resistance. It had acted as resistance on this occasion, and then here it broke out, and then after some what do you say, after profit booking, it came down and again went up, right? So this level happens to be a support now. If this support breaks, then in that case we may see a further downside, but according to me, that is not the case. That we will see in the coming days. Another reason is yesterday's candle yesterday candle took resistance at the middle of the purple channel and then managed to close still above 49,000 levels. And today's candle also, if you see here, has not touched the middle of the purple channel, but it has kind of taken support at the 49,000 level itself and reversed a little, right? So tomorrow it will be interesting to see this black line, right? The black dotted line, that is 49,399, that is roughly around 49,400, is the monthly close for the last candle, that is the month of April, right? and the pattern on the monthly chart I have shown you, it is promising, and it is also breaking out from the wedge, right? So if this month's close, which is on 31st of May, so we have 3 days, 3 trading sessions, and if this close is above 49,400, then in that case, that breakout which happened in the last month, that would get confirmed, and we may see a further upside, right? So all in all, I think, and in 3 days, we, in order to get that close, right, I mean the close above previous month's close, we need 400 points, roughly around 400 or 300 points more. So all in all, I think it is possible that we may see further upside, and this particular red candle, though it is little worried, I mean, though it is little worrisome for me, but I think we may experience tomorrow a gap up or even a reversal, and we may see the markets doing better than they did today, right? So my bias is towards bullishness, and we may again tomorrow retest the middle of the purple channel, and if we break this, right, 49,066 levels, then in that case we may retest the bottom of this purple channel as well. So all in all the possibilities are still open. The biasness is still towards bullishness, the bias is still towards bullishness, but anything is possible. The key levels to note for tomorrow for Bank Nifty would be 49,522 on the upper side and 49,022 on the lower side. So in between these 500 points, the market is expected to be range bound. So best not to enter into a trade while the price is between this. And another thing is, this is monthly expiry, that is tomorrow. So don't trade for tomorrow's expiry unless very necessary. Trade for a lower, a later expiry, right? So I have been telling this 4th or 12th of June would be an expiry to would be a better expiry to trade for, right? So trade for 5th or 12th of June, and the same goes with the Nifty expiry as well, which is a day after tomorrow. So don't trade for this closer expiry, trade for a long-term expiry, so that whatever a slight down move or a slight correction would be there, you will not be impacted too much because of it, right? So yeah, those are the key levels for both Nifty and Bank Nifty, as well as those are the analysis. That is the analysis from my side. Do let me know in comment section whether you took trade today, and whether you booked profits or whether you booked losses. And also, if there's anything else you would want me to cover as part of this video, do let me know. Another thing is, today FII, that is foreign institutional investors, as well as DII, domestic institutional investors, have bought stocks, right? So till now we have been seeing DII has always been buying, FII has been selling, has been on a selling spree, except for one instance where FII also had bought. But today again, after a few days of sell-off, FII has bought again. So the chances are pretty high that tomorrow again FII and DII may continue to buy, and the price may go up, right? So all the retailers would be thinking that the price will go down because of the candles formation, and because this is kind of a high that is there, right? I mean, it appears as a high. So most of the retailers would be thinking that the price will go down, and they will be sitting comfortably on the PEs and the sell side trade. So I think the big players would be smart enough to go ahead and capitalize on this and take the price higher. So all in all, I think whatever you do, trade with a stop loss on either side. The chances are pretty high that the price would go up. So if you're trading on the downside, trade with the stop loss, definite stop loss, right? And if your bias is towards negativeness, and if you're trading the upside trade, still trade with a stop loss, right? Okay, so that's it. And just before we wrap up, a small disclaimer: making money in stock markets is not easy, and there is no shortcut to make money. However, with continuous improvements and over time, we can definitely make money from stock markets. So thank you so much for watching. Stay tuned.